The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Canadians too reliant on real estate to drive our economy.
Yep.
And it was good while it lasted, but it's not productive. Canada as a country, we are resource rich, but why aren't we one of the wealthiest nations in the world? Welcome to episode 77 of the Canadian Mortgage Show. Alex Pang here alongside Alex Shanks. This is take 4.
Yeah, I was gonna say, how many takes are we on here, Alex? You can't complain about my island internet anymore. It's the island is growing the Surrey internet at the moment.
Oh yeah, I've been having issues with TELUS. Like we pay for the highest internet Wi-Fi,
Yeah.
and dealing with that. And I was talking with Alex all day yesterday. We've been trying. Like today, we're recording on a Saturday morning, and yesterday we were trying in the afternoon, later in the afternoon, and then tried to hotspot it. Still didn't work. I tried to move to the office. Still didn't work.
We would get like
And
I
lo and
think at one
behold-
point we got like 8 minutes in, and we were like going through. We were starting, and then boom, Alex just disappeared. So it was like, oh shit.
Yeah, I was getting frustrated. It was the point that you were getting to the throw my computer against the wall kind of thing, or
Yeah.
do whatever. We talked about this. I'm like, you know what? My laptop is 10 years old. I feel it's time. I felt the walls caving in pretty soon. But as soon as we're done here, I'm gonna go on Best Buy and
You might be going to a
replace my
Mac
laptop.
store.
My laptop's yeah, you know what? I'm just gonna go on Best Buy and stuff like that. But
Yeah.
you know what? We've had a busy week. We had the gold medal game. It feels like a long time ago now. I mean, did you wake up at 5 a.m.?
I did. It was, and I stayed up late that night before that, Alex, too. I went to a realtor event and we played Monopoly. It was pretty fun. Our table won, but one of the guys at our table destroyed us. He bankrupted all of us. We finished Monopoly in 2 hours. He had hotels on every single thing. I was like, this is insane. It felt like real life where the developers have all the money and then there's the little people here that have nothing.
Did you guys play the traditional way where you have to go around one full turn and then the second turn when whatever you land you can buy, or did you kind of speed things along?
We sped it up as soon as the first round you could buy, which like allowed it, like he was able to land on multiple things up front, which allowed him to kind of like snowball ahead, which is when you talk about life, the sooner you can do things, the better.
How we played traditional Monopoly was we put all the properties in a brown paper bag and we just handed them out. We just kind of take cards because then it's not really fair. Whoever rolls first has first opportunity to buy those properties first, right? So, that's like we ended up just drawing cards and whatever. So it ended up being, and then we end up making deals with each other, like just to build.
Yeah, that's one of
build
those
properties.
things
So
where
you
you
start
get to
building.
bargain. Yeah, you get to bargain and stuff.
Like, okay,
Like it is a real
yeah, I want like the yellows and the reds. So I'll give you, like based on this value, I got the cheap ones. I'll give you 2 of these plus $1 million for whatever, the yellow, the Jasper, the Banffs, whatever. And then we have a more advanced version where we don't have cash. We have a debit machine, like a computer, and we just have
Okay, you actually
debit
can put
card.
that in, like
And
it
it just
tracks
goes,
the players.
yeah, and then yeah,
No cheating by the banker, no cheating by the banker that way.
exactly. So I mean, what do you think about the gold medal game? I mean,
It
you got
it
deals.
yeah, it was some of the like amazing hockey. I mean, to say for Canada, I mean, like they were playing like they were running on the edge of their seats the entire time. Like pretty much the start of the tournament, the pre-qualifiers, they were destroying people, and then after that, we were going to OT every single time, which is probably not how it should have been. I don't think it was. It just I think the other teams got a little bit lucky, but also like Canada just didn't finish stuff. They had many chances to finish it as well.
Yeah. I mean, Nathan McKinnon is going to have nightmares. Same thing with Devon Taves. But I mean, hey, good to be lucky, lucky to be good. Connor Hellebuck finally came through in the big moments.
Yeah.
And good on him. And it seems like the US is using this as a political ploy. Like Donald Trump has brought the whole team in, the State of the Union, the whole, giving him the highest civilian honor and parading him around. And even the Hughes brothers are going on SNL this weekend. So yeah, hey, you know, we
Yeah,
can't win it all the time. It's good
yeah.
for hockey.
I think it's good for hockey. I mean, it's the person I feel the most saddest for is Connor McDavid. Man, this guy's like he just pours his heart into hockey. Losing on 2 Stanley Cups now the Olympics. Like I mean, it has to eat away at him. Like there is no doubt at that. And I mean, I could see if Edmonton doesn't get anywhere this year, like he's going somewhere else. Like he is not going to end his hockey career without a Stanley Cup. I pretty much can see that.
Yeah, yeah, he's even admitted to his legacy matters. I mean, like they kind of detailed his career, like you said. He lost in the OHL final, lost 2 Stanley Cup finals, gold medal. Yeah, you won 4 nations, but in the grand scheme of things, it's not that big.
Yeah.
But as a Canuck fan, as a Leaf fan, I'm sure he's like, don't win in Edmonton, just go somewhere else.
Exactly. That's I don't- yeah, and I wouldn't to me like yes, he's an amazing hockey player and he'll always be remembered for that. But like without winning those other things, like the name won't be held up there in the highest standards until he has like the Olympics or a Stanley Cup. And so we'll see that way.
Well, we have a jam-packed show. Let's get started. Right?
I want to
I'll read this off.
Have you seen some of the stuff on the news here, Alex? Like what's going on in Iran and everything here? Like I'm gonna say this right now, like it's freaking wild. Like there's like I mean there's missiles going in Iran and everything from the U.S. Everything in yeah, it's kind of wild right now.
Yeah, I mean, I was scrolling Twitter this morning. Usually, it's part of my routine to doom scroll in the morning for content, and yeah, their missiles are flying, and the Dubai airport has shut down.
Yeah. The Burj Khalifa, like how is he is fully evacuated, and it's yeah, like it's a scary place, and I feel for everyone that's there, for families and the military people. Like again, the U.S. is involved in this, and I mean, it's a scary time for everyone. Like it's obviously we don't want dictatorship and everything, but again, where the U.S. is jumping in and bringing stuff that's going to affect everyone.
Yeah, I mean, I have a lot of friends, Iranian friends and stuff like that, and I feel for them. Thoughts and prayers to those in their families and stuff. And yeah, I mean, like, is this another case of no one else can have nuclear power but the U.S.
Yeah.
and I mean, what like at the end of the day, who is this really going to benefit? Like,
Yeah, I mean,
what's really
in this case, like, I mean, Iran has definitely been the instigator in all cases. Like, I mean, it's finally, I think someone has to like think of this, Alex. Like, if we were just sitting here and someone started like bombing us, like, and again, even just like Ukraine and Russia, like, it's kind of wild. Back in the day, like when world wars were starting and stuff, all the countries got together. We all so politically aligned in different ways now. Of like, think of it like a high school group of like you got the cliques, you got all the people, and they're all in their different groups and they're not like intermingling. I really felt like when I was hitting high school, like we were very all together. We hung out with every type of group. Where right now in the world economy is like, hey, if you're aligned with these people, you can't talk with these people. If you're aligned with these people, you can't talk with these people. And so every country's so scared to do anything. But it's like, man, like we can't just let people just bomb each other. Like that's not how we should be living our lives.
yeah, yeah, 100%. I mean, it's kind of scary. I mean, how it's going to affect us on this side of the planet. I mean, it's sorry to boil this down to dollars and cents, but I mean, we can see oil
Oh, oil's been going up for the
spiking.
last like 2 weeks. And it's
Yeah,
again like the
gas prices here in the Lower Mainland has gone up. I think it's close to $1.80 now.
yeah.
I don't know what's it on the island.
We're at like $1.75, $1.80 in some cases. I mean, I think I saw some places in the Vancouver area at like $2 too. Like it's not, and this is where we're going to be talking about some stuff with interest rates and stuff. Like Monday, some of the stuff we talk about today on the Saturday for when we record this, we may be delayed because of all the stuff that's happening.
Yeah. Yeah. So let's get into it here. We're going to start off with the more Canadian stuff and lead into more international stuff. Okay. So Canada's Q4 GDP actually it contracted on an annual basis. Now with a full year growth of only 1.7%. Now this is largely due to manufacturers actually dipping into their inventories to meet demand instead of actually producing fresh goods. So this doesn't help the whole productivity file there. Now, per StatsCan, GDP contracted at an annualized pace of 0.6% in the October to December quarter. compared with a revised 2.4% increase in Q3. Now, this 1.7% in 2025 is the slowest pace of annual growth since decline in 2020, since the beginnings of
World
COVID.
shut down. Yeah. And I mean, it's not, these are all bad things, which again, the government has been saying that, hey, we're not in a recession. Everything is running great. Um, these are the things that point that that's not the truth here. Which is why before a month ago, when everyone said that rates were going to be increasing because the jobs reports increased, inflation went up a little bit, they were lagging a bunch of data. And again, everything has to come out. Like, why I don't love the news and especially social media sometimes is like you see one thing and you jump on it instantly. Like it blows it up right away, where it's like, hey, like let's wait till we get the rest of the data to see what's going on here.
Like, one thing is not going to affect something else right away. It means other reports in other areas, especially since we're a housing podcast, we talk about sales, jobs, income, debts, all that stuff. I mean, we segue into the next part here with homes here, and we talk about GTA a lot because, unfortunately, yes, they're the center of the planet for our country, because it has the largest concentration of people. Now, in the GTA, only 268 homes were sold in
New homes,
January.
yeah, new homes, which
New
is
homes,
little.
yes.
But I mean, think of how many people they have. I mean, 40 or what is it, 60% of the population is in there, and only 269 homes were bought. Like that's pretty crazy.
Yeah, I mean, that's the lowest level since 1981. So 1981, shoot, that's 45 years now. I remember I remember when I was younger, 20 years ago was 1980. Well, shoot, 20 years ago was 2006. I'm like, hot dang, where did the
Yeah,
time go?
you get to say that you're old now.
Oh yeah, I am getting old. I mean,
Yeah.
speaking of getting old, we didn't have time for this, but uh, before the gold medal game, I had my 30th high school reunion the night before, and I was co-MC, had a great time, and you were saying how people now are all in cliques.
Yeah.
It was like that in high school for us too, but I think as we age, wisdom comes into play. Everyone is a friend now. Like everyone, like I feel like now that I'm older, I appreciated my high school now. Like during the time growing up in high school, it wasn't the greatest time for me. But now that I'm older, I get to, meet people, meet my classmates, and just enjoy, because you know what? Our priorities at 47, 48 now for me are a lot different when we were 18. Life is a lot different.
Yeah, it's funny. I was at the coffee shop and I saw a guy that I went to school with back in grade 7 and stuff, all the way through. And we were just chatting, catching up. And my son was like, "Who's that?" I was like, "Oh, this is someone that I went to school with. You have your friends. Like you may not stay connected with them for your entire life. And yeah, it was nice to catch up with someone that you knew in a different stage of your life."
Absolutely, absolutely. I'm sorry for those of you listening. Our agenda today, we're all over the place. I feel a little bit shaken because we're recording like on a Saturday morning. This is like our fourth try. I'm a little pissed off. I need a new laptop. And yeah, things are going on in the world. I mean,
It's
the
a
world.
fun Saturday. I'm a bit anxious, to not to lie, about like everything that's going on with the Rockets and stuff. I saw some videos in my it's I feel I've had this coffee had 4 shots in it, so I feel like I'm a little running high. But one good thing here is like mortgage rates have gradually been leaking lower in recent weeks. And what we need is fixed rates, not variable rates. There's been no changes on variable rates, but the fixed rates, like the good thing here is bonds have been going down. Now, what had happened like in December and stuff, we were on average like 4.2, 4.14 for like fixed rates, and those have been coming down, which is again nice to see. An average, depending on if you're getting an insured to unconventional, you're at like 3.8%, which like I believe is like a really healthy rate. That's to me, if we go back to our 2025 of what we thought rates were going to be, that's kind of what I said. Like, hey, I feel like a conventional rate should be like 3.8, an insured rate should maybe be like 3.5, 3.6, and like we're very close to that. Now, if you're
Yeah.
variable, is the time to lock in. It's again, I always say you got to think of what yours. Could rates go a tiny bit lower? maybe I like to play a risk reward. Let's say that we lock in today, Alex, and rates go a little bit lower. What would that have gained you if you didn't lock in? Some cases it could be like $1,500 over 3 years, 4,000. But I also like to play, well, what's my risk? What if rates go up 0.5%? How much am I risking that way? And again, I'm willing to risk like a couple $1,000s, but if my risk is $10,000 and my reward is only $1,500, I'm probably going to lock in.
Yeah. I mean, we've long talked about this since the beginning of this pod. When fixed rates are back in the threes, you should lock in. And that's what we've been telling a lot of our clients too. Um, it feels like we've been waiting for that moment. We've been like we're at the gingerbread house and we're knocking on the door. Can we come in? And we feel it's really close. And I don't know if this Iran war is gonna cross us over that threshold where
Yeah.
it seems like it, right? Where maybe consumer confidence is down and then we have to drop rates. But at the same time, oil is spiking, so that doesn't help.
No,
So
and I
I
mean,
don't know.
my fear, I've always told everyone, even this was back in 2024, of like rates aren't going to go up more if a war doesn't happen and oil prices don't go up. Like that is pretty much the thing. We go back to 2022 when everything completely changed, and it was due to the war in Ukraine. That's what started all this going on. And so it's something to me like need to be watching. And I know Alex and I will post it on our social medias like come Monday. Bond rates might skyrocket. Like we don't know what's going to happen at the moment. Is stuff going to go up? Are people going to be scared, or is it going to be like crap? Like our economy going to do even worse? Maybe they go down.
Yeah, I mean, I was looking, uh, a couple days ago with the bond yields. Currently, bond yields are at 2.6. Now, would you would you lock into variable at this point, or should we're kind of in the wait and hold and see how it's going on period right now? Like
If
it's
I
buy
get
kind of thing.
again, I'm a component myself, Alex, of either 3 year fixed or a variable. The thing for me, and I've realized this would be my wife, the longest we've ever stayed in a place is 3 years. We either sell that place to buy something new, or we're refinancing to take equity. So like I can't lock myself in for 5 years because it doesn't work for what I need to do. So I have one mortgage that's up for renewal here. I've gone into just a HELOC right now because I'm trying to decide, am I going to take some equity? Am I not? And if I do something, I'll probably be locking into a 3 year fix. That's what I like. The spread is like, even if the variable rate's a little bit lower, the reward for me is just not high enough. I'd rather know, hey, I'm locking in this way for 3 years. Now that my fear with a 3 year fixed actually right now is what's going to happen down south is in 3 years, that's when our rates coming up. We don't know what's going to happen. Rates could actually be higher. I need it for flexibility, but it is like a 3 year fixed it's a little less on my higher take right now, just because we don't know the uncertainty in the US.
Yeah, absolutely. All right, so now we move on here. According to National Bank, housing affordability posted an eighth consecutive improvement in Q4 of 2025, the longest streak ever recorded. Now, you're going to see here on the graph here, the combination of falling prices and falling mortgage rates has brought mortgage payments as a share of income to its lowest point in almost 4 years.
Yeah.
Um, so that's good news. The bad news is it's still unaffordable. So that's great. But I guess it's come down from astronomically not affordable to a little bit lower level. Still unaffordable, but not as bad as before.
It's now, if you were a dual income household, it's now become like close to affordable. If you were a single household person, like trying to buy, like if you're like, hey, I'm single and I want to buy a place, the numbers still don't work. When I was younger, I was able to buy a house by myself. That doesn't work today. You need to have at least two incomes to be able to get something.
Yeah, 100%. And even like trying to pre-approve a single income person. Like one of my clients, he's a bus driver and he makes, decent money, good money. And he can only qualify for a one bedroom apartment, which
Yeah.
that's what he was looking for. Fine. Thankfully, prices have come down from the peak. It's come down into some areas 15 to 20%. So, and fortunately enough, he's not siloed into one location. He can transfer bus depots and wherever the so he can. He lives in Richmond, but he can go out to as far as Tri-Cities and
Nice.
such.
And I mean, if he can get his like, the very first thing I ask someone, Alex, when I'm having a call with them is, how much are you paying in rent? Hey, if you're paying $2,500, and hey, if you buy that one bedroom, you might be 25, 28. Like, hey, that's amazing. I have other people that are like, oh, I'm paying like $1,500 a month. And I show them, hey, your budget's going to be going up to $3,000 a month. They're like, whoa. And what I tell them is, hey, you're going to, for the next 3 months, you're going to put that extra $1,500 into another bank account. Feel what it feels like. Because if you go buy this place, like, that's what your budget's going to feel like. You can qualify for it. Qualifying is only one part of it. Like, what's actually going to be there at the end of the month? Do you still have money left over? Or it's like, oh shit, I only got $50 in my bank account now.
Yeah. I even told him, like, I was looking at how much he's renting, and it's pretty close to the number you gave. It was 1,400.
Yeah.
And I was doing the math. I'm like, you probably already know that you're going to be paying more than rent, right?
Yeah.
Because he's like, yeah.
Yeah.
So all is said and done, he's going to end up paying like $3,000 a month.
Yeah.
But
And again, it
he's
depends.
kind of in that.
You want to own something. Like, it is a feeling, and we have to, like, there's numbers and everything in it, but it's also a feeling of like, hey, I get to put this picture up on the wall and it's mine. No one can tell me to take it down. I can't be kicked out of my place. And that's what we do have to remember. Like, owning a home has an investment purpose, but it's also like, it's just like the soul feeling as well.
Yeah, absolutely. So, I mean, can real estate go down a little more? Yeah, we think it might in the next year or so. Is and we're not trying to pump the tires in real estate, but if you've been kind of sitting on the sidelines the last couple of years waiting for prices to come down, interest rates to come down, they've all done that.
Yeah.
So, and if you don't want to wait any longer, just go ahead and do it. But yeah, it's a good time to buy. I mean, bad news for the economy means good news for rates. At the same time, hopefully you haven't been a victim of the layoffs and all that stuff. That
Yeah,
you can
that's I was talking
still
to
be
a
employed to
couple.
be able to take advantage.
I was talking to a couple government people, and like, luckily they got their word that they weren't going to be getting laid off, but like, it's really the government employees that are going to be on chopping blocks. I remember when the tariffs were coming in, we remember BMO had certain things of, hey, we're not going to lend the same amount of money to people in these industries. And again, I already talked to people about that of like, hey, like, how's your industry right now? Should you be buying this $1 million home? Like, is your job secure? Do you have a backup? Like, that's what Alex and I are here for as well as advisors. Is like, it's great to say, hey, you qualify for something, but like, you want someone to sit there and say, hey, like, is this actually a good idea? Talk about why you're doing it. Because sometimes you just believe, hey, my family said I should buy a house because they bought a home back in the day for 200,000 and it's worth $1 million. So they're like, you should own a home. That's what I find when I talk to clients that are younger, and it's like, hey, like, what's your job like? Are you certain that you're going to keep this promotion? Are you going to be going down? And that's what you want to look at.
100%.
Now, this is where, again, the economy, this is Canada's housing downturn is the steepest amongst major economies. You'll be able to see here, Mexico is actually the highest here, which is interesting to see that way. And this is Q1 2022 to Q3 2025. I would believe this gets even worse for Canada. This would probably be a better spot than it is if we took the data today as well. And in our case, we're at negative 18% here. And it doesn't look much better. I mean, again, every area is a little bit different, but Vancouver and Toronto make up the majority of the market share. And they're all down very largely. Where I live, prices are up. Like, we're in multiple offers and everything. So like, not all of Canada is like this, but as a whole, when it take in Vancouver and Toronto, that's what's bringing these numbers down significantly.
You know what this graph tells me is that Canadians too reliant on real estate to drive our economy.
Yep.
And it was good while it lasted, but it's not productive. Like, Canada's a country, I mean, we've long talked about it. We are resource rich. But why aren't we one of the wealthiest nations in the world? We have too many chefs in the kitchen, too many special interest groups. We have the First Nations, we have the environmentalists, whatever, the Society to Preserve the Hummingbird, blah, 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 blah. Too many surveys and too many like consultations. And, I'm going to talk about this later, but, it takes close to 20 years to approve a mine. And because of that, nothing ever happens. Yeah. At the same time, what this also tells me is that Mexico has the highest is that maybe a lot of the money coming from Canada and the US are pouring to Mexico for people wanting to to escape. But we're going to talk about later. That might change.
And again, that's, I mean, yeah, well, we'll talk about that. But like the big thing, like I saw, I can't remember the exact post, but like how like Canada has the number two uranium, the number, like all these different things. And what someone posted is that the countries that have this usually get started wars to get those resources. Like that's what happened in history of like, hey, you have all this stuff. I'm taking you over. And again, we could be using those resources to help us. What Alex is talking about, like it taking 20 years to build a mine, the hardest thing with this is we know in every industry there's bad apples. There's people that do not care about the environment at all, and they've kind of ruined it for everyone else. Now there has to be so much red tape. And again, this is where maybe we need to have people that are watching this a little bit better and be like, hey, you know what? We're going to be a little bit looser than we used to be. But the problem is people take advantage of that. Like that's the issue here is we can't trust people because they'll be like, oh, I'm just going to start doing this and I'm not going to give you anything for it.
Yeah, what this also tells me here, I'm looking at this graph a little closely here. Like you see the US, um, they are not totally reliant on real estate. It's more like a byproduct of industry, excuse me, industry with tech, manufacturing, like innovation and businesses. They're more of a, the healthy environment. Same thing with like Japan, Germany, um, India as well. But yeah, like we need to stop really relying on real estate for driving our economy. So next up here, Equifax. There's a report that came out here that says while incomes in Canada have risen 76% since 2004, the national average price of a new home at the lower end of the market has risen 265%. So if you can imagine a imaginary graph, so one is clipping up at 76%. That's really good, right? Your income. The other one is skyrocketing. So you see the gap widening.
And I would love to know, is 76 the higher side of this and the 265 is the lower side? Because I remember seeing some charts that it was like 1,000%, like in some cases. And that's where like, again, is that 76 the higher side of it? And then the lower side is 265 for housing.
Yeah, I mean, back in the day, now I say back in the day was like we're talking 20, 25 years ago. It only required 3 to 4 times income for a modest home. Now that number has ballooned out to like, geez, 10 to 12 times.
Yeah.
Having to use rental income to offset everything like that, blah, blah, blah. Now, here's an interesting tidbit here. Even if home prices stopped rising entirely and stayed flat, it would take 25 years for the incomes to increase, for this price to income ratio to reach the levels they were in 2004, which is kind of a sad state of affairs. Now, an economist, Mike Moffat, he did say that government needs to not only work to reduce the cost of home building, but radically alter Canada's zoning laws to allow for more infill development. So for folks who don't know, Alex, do you want to explain to our viewers out there, listeners, what's infill development?
I mean, this is more like not just single family homes, like this is multi-home townhomes and everything. And it's not like towers. Like it's actually places that people can have families and everything. That's the hardest thing is we can build these towers as high as we want and say we have all these spaces, but who wants to raise their family in a one-bedroom condo? And so we need some more space. We need to build townhomes for people to have a starting number to get into. The first place I bought into was a townhouse. That was the first place I got. It was a 3-bed, 3-bath. Most people have to start at a 1-bedroom, 1-bath, which, hey, is great by yourself. But like we talked about, you need 2 incomes to usually qualify. And so in most cases, you might want to have a second bedroom. What if you want to have friends over? And so with infill, they want to be able to design more homes. But of course, you get the NIMBYs and stuff that's saying, hey, I don't want townhomes in my housing neighborhood. I don't want this. And it's like, guys, like let's all come together here. Like there's ways that this can benefit us. Like we can get back to more community roots. Like if we go to Europe and everything, that's how all their housing is. Like only in the countryside are really like single detached homes. Everything else is infill. It's multiple homes, townhomes stacked on top of each other, and they live a great life.
Yeah, I mean, I think as North Americans, we're used to the the home and garden lifestyle with the, big homes, big things, cars, white picket fences, all that stuff. But, a lot of times these shows, they detail things like in Texas where land is vast and things are bigger, and all that stuff. They won't have shows on condos. Geez, that's more like, the shows that they show condos is like $1 million listing in New York where,
Yeah, when you're looking at, I mean, their condos are 4,000
properties,
square feet.
yeah, 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 4,000 square feet and prices that are beyond our imagination. Like, oh, uh, my price point for a condo or whatever is 15 million. Oh, this one, oh, I'm going to show you a price, a penthouse for 13 million. Oh, it's not good enough for me. Da, da, da. Like that kind of lavish lifestyle is way beyond our like,
I like to look at those out just because like it blows my mind. I am very rare that I've seen a place that I'm like, damn, even if I had the money, I would want to live in there. Like they're not places that I would want to live in. Like I kind of find it bonkers. And that's where there's so many places like see some amazing homes in Philippines. That's where I follow this guy on social media there, and he has like have you ever they're called Veritariums? I don't even know, but he has like full on like ecosystems inside of his house. I'm like, damn, like that is cool. Like that's what I would want to live in.
yeah, we long watch these shows that show, um like, oh, hey, I want a 4 bedroom, 3 bathroom home
Yeah.
and da 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 place for my kids. Oh, what's your budget? 150.
Yeah.
Of course, it's in Alabama that you can get something like that. I'm like, there is no way. Like, it's part of the states. Obviously, I'm a minority, so I don't know if it's a really racist part of the country. Am I going to survive there? Now, what appeals to me is shows like House Hunters International
Yep.
where you either they rent or they buy. Most likely they're renting, but just to see how much $2,000 a month will get you or whatever their budget is. And those are interesting things because my wife and I, we do want a snowbird once we retire, so we're like, oh, that's not too bad, that's kind of cool, like in the city and all that. And obviously it's a different lifestyle where uh North America likes bigger and better, but the rest of the world, um, they live on more minimalists.
And I mean, really, like I think like 12 to 1,500, like that's really like the housing, like that's like the ideal size that we need to be building for, not 3,000, 4,000. I left 2,400 square feet. We went to 13, and 13's a bit too small for four of us. Like we need like 16, 17, but like we didn't need 2,400. Like we knew that. And we're like, we're barely here. We're doing other things. We're traveling. We have kids. But yeah, I mean, some people just love having that size of house. I don't want to clean it.
Yeah, I mean, my wife and I
Your guys' house is
looking
massive. Like, how big is your house? Like, what your living place? Like, I mean, your place is massive, Alex.
yeah, so Alex has been over to my house a couple times. He slept over a couple times for industry stuff. Um our house, based on BC assessment, is 4,200 square feet.
Yeah,
Having said that, we don't live in 4,200 square feet. We
you
rent
guys,
out our
you have
entire
suites and
basement.
stuff. Yeah,
Uh, yeah, so we have two suites. So if we take away the suites, the four of us live in about 2,700 square feet total. Maybe a little bit less, maybe 24 to 2,500 square feet. Um, I think I mean, that's a decent size for the four of us.
yeah.
Could we get smaller? Sure, we could. We could,
I mean, you guys got a second. You guys have like a second kitchen. Your guys is like the what do you call it? The snack room. Like it's a full on second kitchen.
yeah, that's the spice kitchen. And for the houses in like, I don't mean to boast, but then especially in our where we live in Surrey, uh people cook stinky foods, either like, the curries or like the deep fried stuff. And people often they call it walk kitchens where they cook and it's an enclosed area. We actually don't use it for that. We use it more for our storage room, a pantry, whatever. And it's a backup in case we have power outage. But yeah, we look forward to the day that we can downsize because we want to free up. We don't want to be house poor. We want to be able to travel and not be ridden by debt that, it's like modern day slavery, to be honest.
Totally. Now, this is StatsCan. Canada has no payroll employment increase in a year. Year over year, Canada lost 28,300 jobs. And Canada's payroll employment, it's showing December 2024 to December 2025 range. You see in 2024, lots of jobs, all the way to 2025, and then it's going down here this year, which this is where like stuff is getting cut. That is for sure.
Yeah, I mean, we've long talked about how the private sector hasn't grown really since, geez, I think ever since rates started going up and economies, government consciously trying to tank the market by raising rates and all that stuff. Um, and we've always long talked about how government's jobs were safe and secure, but 1 in 4 Canadians who are employed work for government in some level. And but now that we're seeing uh, layoffs, cutbacks in the federal, provincial, even municipal, this number kind of reflects that, how we're seeing
Yeah.
payroll decreases here, losing this many jobs here. Now, speaking of jobs, um, StatsCan is announced that they're going to cut 850 jobs um, in a dark time for public service. And when they say dark time, I'm like, well, welcome to the rest of the economy where
Yeah.
no industry is safe, from layoffs. Now, the federal stats agency has issued 3,200 workforce adjustment notices, according to the union. What that actually means, I don't know what that means. It may be shifting, it could be reducing hours, it could be voluntary retirements, buyouts, all that stuff. Um, yeah. So my wife is experiencing that with her work. So she is safe from all those, but there's going to be some
Slow down.
because of AI and all that stuff.
Yeah. Yeah. Now, I mean, this is what we talk about Loblaws all the time. And I mean, we'll be interested to see here. And I mean, they're saying they're going to create more than 90,000 jobs with 70 store expansions in 2026. And they're saying they're going to invest 2.4 billion into the Canadian economy. Now, I mean, I could see this being 90,000, like 9,000 jobs, sorry, not 90,000, 9,000, uh, is going to be probably the ramping up to get the stores too. Like once all those stores are running, I don't think it's going to be 9,000. And I mean, we can see every store is trying to use those damn, like what, like forcing you into like the check things and everything. And I mean, I don't know about you, Alex, but like our Walmart, half of them aren't even open. Like it's always jam packed and I'm having to wait. I'm like, why is the left side not open? If you're going to do these damn automated things, like let me go to the other spots as well.
Yeah, I mean, you would think that at the time, the self-checkout would help grocery prices go lower, having less people.
No.
But we've talked about how food inflation's got up 7.4%, 4% or 3%, and the food companies are making record profits still.
But I know in the US, like I think in some cases they've had to stop a lot of those things because like the amount of robbery that happens and thievery from these automated systems, like the self checkouts is staggering. Like I think on a daily basis, I think I saw something of like hundreds of thousands being stolen from some shops and everything.
Yeah, I mean, it's good that Loblaw is creating more jobs, but at the same time, this is kind of quarterly earnings season.
Yeah.
They miss quarterly revenue estimates as Canadians overall have tightened their household budgets, even though food prices have gone up. Either a grocery bill has gone up or people's budget is pretty like static. So they're just buying less groceries overall, like
Oh,
not
no,
buying
yeah.
the luxury
Yeah.
stuff
Yeah.
like the meats, the steaks. I've long talked about us not really having steak anymore. And people are buying less groceries or going for like the no frills or whatever. Funny enough, no frills is owned by Loblaws, isn't it? It's part of the PC umbrella,
Yeah.
you know. So
And again, like them missing a quarterly revenue, they're still making profits. It's just they told to their shareholders, we're going to make more profits, and they didn't hit those. Like and this is obviously a problem with businesses. Everyone wants to keep growing. You always want to be growing. Either your way of growing is you make more money, you take more profits, or you have to cut expenses. Like there is no other way to do it. And in their case, most of the time they're trying to cut expenses by automating things. And then I think they're also increasing prices on stuff that maybe shouldn't.
absolutely. Well, speaking of making money, what's next, Alex?
Cool. The big sick banks report healthy profits in their quarterly earnings reports, and I mean we've just been seeing it, like especially with the spreads of bond yields and interest rates. Like the banks have been making bank. Now mortgages are not the driving force. Like that's not where banks make all the profits. It's other stuff. And right now it's debt. It's credit cards and everything. Like that is where a lot of banks are making their money from.
Do you see the day where, we in our industry, we have OSFI, our banking regulator, essentially. Do you see the day where there's like we rise up and there needs to be some regulator towards credit cards? How credit cards are having like 19 to 29% interest,
Well,
and they will give a credit card to someone who has no job, no means of paying it back, and they have the system where we can charge this much interest because we've already shown statistics that a certain percentage will default on it. So we are calling that the cost of doing business, and they're still making record profits.
well, they're
Same thing as car loans.
they're the biggest profit. They're 50% profit margins. That's what a credit card company is, which is insane. Like that's insane. And that's where it's like, hey guys, what if we cut interest rates down to 10%? Okay, your profits go down to maybe 35%. Like, which is, hey, that is still very healthy. And I believe, like, for one, the way that mortgages are done in Australia, Alex, is hey, if you want to get a mortgage, hey, your debt from your credit card, even if you're not using it, it goes into factoring against your qualifying. They're trying to control people to make sure, and I don't mean control like taking, but helping people say, hey, you shouldn't have access to this much debt because we don't want you to use it and be stuck underwater. In Canada, we don't really look at that. You could have a $50,000 credit card, like available, a limit, maybe has a zero balance. You buy a house and then you go spend $50,000. And I always like to sit with people and say, hey, like you can tell, like I can look at someone's credit, see how much they're using their debt and everything. And I may not suggest certain products based on that because I want to make sure that I'm helping benefit themselves, not just put them into more debt.
Yeah, exactly. I've talked with some clients who, oftentimes if they built up enough equity and they have the room, like, hey, do you would you like to have a HELOC or home equity line of credit attached to it? If you don't use it, it's nothing. It's good to have if you, um, but you have to be disciplined. You can't use it as an ATM, to fund your lifestyle. And thankfully, some clients, um, they declined and be like, you know what? I don't have a need for it. And I know ourselves. If we have it, we're going to use it. I'm like,
And that's good. That's
good on you.
someone.
Good on you.
Yeah.
Good on you for that. Now, some we were trying to get a line of credit for, but couldn't qualify because of debt ratio limits, and they were consolidating. And they didn't end up getting it. I said, you know what? Here's the bad news. The bad news is the bank only can qualify you just for the mortgage.
Yep.
Um, the good news is, in the grand scheme of things, it might actually be better for you that you don't get it because we've had to refinance you a couple times to consolidate debt anyway. Like it's almost like the world is, the universe is telling you you probably shouldn't get it.
That's
So
I
if
saw.
anything,
I like that you brought that up, Alex. I saw a post in an Alberta investors group, someone saying private money up to 85% loan to value. Just for people to know, most banks will only go to 80%. To go above that, you're at an insured mortgage. And so there's private lenders that will go to 85%. They're charging significant like fees and interest rates. And they said, don't worry, come to us. We're cheaper and quicker than the banks. I'm like, God damn, that's so predatory because people believe, and it's the people that keep refinancing over and over. And I mean, honestly, if I was a bank and I could track some of that, I might be like, hey, this person's refinanced 5 times in the last 5 years. I may not want to lend the money. Like they're obviously now again, hey, they made all their payments, but at some point they keep refinancing to cover up that debt. At some point, it's going to catch up to them. Should they just sell their home? And I find mortgage brokers, banks are willing to have those hard conversations with people to be like, hey, you know what? I think what's honestly best for you right now is sell your home, restart, get yourself covered, maybe pay rent for a little bit, but like you're just chasing the dragon here. Like you're going to get caught up.
yeah. And I think for probably the last 15 years, people have been okay because home prices it has increased and they've been just able to refinance every single time to cover up. As long as you can qualify for it, they've been able to refinance every time to kind of cover up their spending habits or they're living beyond their means kind of thing. Um, but yeah, I mean, like I'm calling on other brokers in the industry who listen to this podcast. Like, give advice. Don't be an order taker like at the banks, because we don't get advice from the banks.
Yeah.
You and I, we work with some major banks. We love them. No slags to you, but banks in general, they don't give advice. I feel like I've gone through this myself. I feel like I'm being sold to, and service is not the greatest. I've had to follow up, and it just kind of highlights both how you and I, we kind of have to go above and beyond and be like, okay, what separates us is we're looking behind the curtain. Like, this is it, but you have to look at your spending habits, and like you have to have a plan or something like that. Where
Yeah, I know, Alex. You just did something. We won't go too in depth to it, but you told me about it, and I was like, hey, did you get the cash back from them? And you're like, what do you mean? They didn't talk to me about it. You have to go back to them and say, hey, where's the cash back? Like that, like obviously that's them. They're like, awesome. The person didn't ask about it. We're gonna keep more money for the banks. And again, the bank employees are there for profits. They get given, in some cases, commission. The more money that their branch makes, the more money they're gonna make. And again, we're all here for money. There is no doubt. I mean, Alex, we don't do our stuff just for free. I'll help people for free. There is no questions on that. But I do know down the road it's going to pay dividends. But if you know that there's something there, just freaking offer it to the person. Don't make them have to ask for it. Like that's what I hate.
Yeah, and this is kind of a call to all salespeople of all industries. This is a saying that I've learned over the years. Is I think it's from Zig Ziglar. Is if you help enough people get what they want, you will get what you want. Serve people first, and don't be thinking of just making the commission, making the sale enough, because it's going to come back and bite you if you're not putting people in a better place, or you're improving their life in some sort of capacity. It's going to come back to you. Sure, you're going to do lots of volume and stuff, but you're not going to have return.
Oh, exactly. It's the one time thing, and that's like I was
One and done, and they're gonna feel like you were taking advantage of them. Like when we go out to a restaurant, you have a great experience. Most of the time, people don't post about it, right? But if you had a bad experience at a restaurant, you're gonna tell 10 people.
Yep.
That's the same thing. Like, pay it forward. Uh, like, be a positive to your industry or whatever. Like, serve people first, and you will get what you want. If you do enough of that, you will get what you want. Right?
I always
My mantra.
yeah, I always like to say it, Alex. Like even sometimes, like yesterday, the bank messed up with getting some funds. The number was incorrect. And they charged an appraisal for clients when they should have. For me, didn't even question. Just say, hey, send me the bill. I'll pay it. Hey, it was not my fault. That was the bank's, but I was not going to make the clients take care for that. They would have been pissed. They would have blamed it on me. To me, it's like, hey, you know what? Let me solve your problem. And I know even at restaurants, the people that maybe that day it was just a bad meal. The restaurants, and I know the keg has been good for this, is they say, hey, your meal's comped. Like we're not making you we're not making you pay for it. You will remember that and be like, hey, you know what? I'm going to give them another try. Other restaurants will be like, oh, sorry, I'll give you 10% off. Like it wasn't our fault. It was bad meat or something. It's like, no, like you have to make people feel cared for.
Yeah, exactly. Like, for folks out there in the service industry, like, go above and beyond. Like, the feeling that you get, whatever you go through, if you like being taken care of, do the same thing for your customers and clients. Like, that's how, thankfully I grew up in the hospitality industry, and that's how I serve my clients the same way, because I like to be treated like that. I like to think of all the things for opportunities to save money. Did you think about this? Because I remember being in this space too when I'm refinancing, buying, or selling. It's a lot of stress, a lot of things that you have to worry about. And if you're able to help somebody else take the load off by thinking, because you've been experiencing it, it's not part of your purview, but it goes above and beyond, and you'll become a trusted advisor in someone's life when the time happens. So I apologize, folks. Alex and I are going on the soapbox, but we need more service-oriented people in our industry, all industries, like less sales, but more service.
Yeah, exactly. And that's where it's why. And I mean, the problem with commission-based roles is like sometimes certain lenders pay more money, certain products pay more. And like, I don't love that. And I'm upfront with people. Hey, guess what? If I put you into a 5-year term, I get paid more. Hey, I'm suggesting that a 3-year term is better. You get to make that decision. It's not my pocketbook that's making that decision. And it's making sure people understand that. I don't go to certain lenders just because they pay more money. I'm going to the one that's best for the client. I'll show them every option. Again, they get to make the decision, not me.
Yeah, 100%. Even, even during the dark days in our industry, I would say 23 to 24, where rates were really sky high. We're at 6.5%. Most of the people in the industry have been advising. We've all been advising. You and I have been doing the same, advising 3-year fixed because 5 is too long. Historically, people have been taking 5-year fixed, 5-year variable. Variable was way too high at the time, so that was completely out of the picture. So we're telling people take 3-year fixed because it was kind of the sweet spot. Um, um, it's long enough so that whatever high interest rate environment is, gives us enough time for when rates do drop because we were expecting it to, which it did. But it's not long enough for 5 where you're stuck in a 5.5% interest rate. So lo and behold, and we took a 3-year, people who took a 3-year fixed, we got paid less, even though volumes are down. Like, so it was really tough. Like, I'm just speaking for myself. Like, I went through tough times, but I was still advising people to take 3-year fixed because it was better for them long term. So, right, even though it was to the detriment of me, I was there to serve people, and it ended up benefiting because a lot of them we were able to break out of because rates went down quicker than we thought, and there was a business case to break to save money to still pay the penalty, but the interest savings exceeded that. So, it just boils back to home is serve your client first, and you'll get what you want at the end. Sooner than later.
No, exactly. Well, I think we ran a little bit longer here, Alex, because like we said, we were kind of all over the place, I think, but it was nice. We talked about a lot of stuff here. We got a lot more that we didn't get into here today. I got some sick kids here at home. I got to jump out here now. We're going to come back next week with even more information. I'm interested and I'm scared to see what next week honestly holds us with everything that's going on, especially in Iran and those countries at the moment here.
Yeah, and funny, we do have a guest that's coming on, so some of this news might have to bleed into a couple weeks from now, or we'll talk about these next news items with our guest here.
Yeah.
So, on behalf of Alex Shanks, I'm Alex Pang. Thanks for tuning in to episode 77 of the Canadian Mortgage Show. We will see you next time.
See you later.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.